let's focus on the global space. Richard Gibbs, the global head at Macquarie Securities, now joins in. Hi, Richard. Thanks for speaking with us. First up, can you take us through what are your expectations from the Greek debt negotiations?
It does look as if there will be bridging finance or an extension of the terms and conditions offered in relation to the resolution of this current impasse on the Greek debt side. I don't think we need to fear a default or a significant haircut for creditors. The Greek finance minister has been very keen to be working the hustings, if you like, reassuring basically investors that Greece is not going to make itself a pariah in terms of public debt.
So, according to you, what now is the likelihood at all of Greece exiting Eurozone? Also, would you think there are still some contagion fears, or are all these unfounded fears?
I think that's a fairly low risk, actually, and that's fairly high stakes for Greek to exit the Eurozone. The Finance Minister and the Prime Minister both see the virtues of Greece remaining in the Euro, and really it's basically I suppose the anti-austerity movement has been really pitted against that mountain of debt that they have, not so much monetary union per se. So I think that the Greek people overall see a lot of benefits from being within the union, and the Syriza-led coalition government is also likely to pursue that line. So I think those kinds of concerns have been a little overblown by people wanting to break apart, I suppose, the Eurozone overall.
Okay, so Richard, the euro is currently at that 1.13 level. Do you think we could see a drift lower based on, say, factors like Greece as well as the recent QE by the ECB?
Look, certainly we could see the euro drift lower, or trade lower, really, because we haven't seen, obviously, the full effects yet of fully fledged quantitative easing either from the European Central Bank. Remember, that's most likely going to have the most downward, or place the greatest downward pressure on the euro, particularly against the US dollar as we move forward. And that's really what we're still waiting to see, that unfolding. I think really to the extent to which there has been reaction in relation to the Greek debt issue, that has mainly been contained within Greece's domestic financial markets. So really when we're talking about further downside for the euro on valuation, I think that really does smack of quantitative easing coming through, and that liquidity, and that really the printing of euros basically, and the export of them, and the purchase of other foreign currencies. So yes, we do suspect there potentially is another 5% down leg in the euro US dollar rate, but we are concerned that if that's matched by an overall appreciation in the US dollar of 5%, we may start to get pushback in relation to this ultra easy monetary policy.
Okay, yeah, so that looks like what, a 1.06 or 07 on the euro. Okay, let's now concentrate on India, Richard, since you follow this market so closely. Indian markets have been seeing the foreign investors pulling out money, albeit in small doses, but continuously for the past 9 or 10 days. What's concerning investors, you think?
Look, I think it's been the tailwinds supporting the Indian economy and the Indian market generally have been so rapid and have turned positive so rapidly that people are concerned about the sustainability of that. And of course, we've also had an earlier than expected interest rate cut from the RBI, and we expect another full 1% of cuts in up to the end of fiscal year 16 by the RBI. And I think there are people saying, well, is this getting ahead of itself? So is the market pricing of risk becoming a little misplaced as well? Because there are just so many positives now coming through for the Indian economy and Indian market in an environment, in a global environment, which is far from happy and content at this point in time. So I think there's a bit of a reality check going on. I'm not sure there's anything structurally amiss. I think it really is this issue about whether this period, the sustained period of ultra-easy monetary policy and ultra-low interest rates is giving rise to distortions in asset markets, and whether the Indian market may be prone to those distortions.
Richard, how closely were you and foreign investors themselves looking at the outcome of the Delhi elections, and how have you read it?
Yeah, look, I think basically the national government is basically providing the benchmark for what investors are looking for and how they're reading elections now across India. And really what they're looking for is they're looking for reformist mandates and strong reformist mandates for these particularly large population regions where elections are taking place. Because they're already seeing the proof in the pudding in terms of the Modi government and the fact that we've had some early progress on structural reform, on the structural reform agenda, and that is improving the business environment. It's improving the ease to which to do business in India. Obviously it's improving margins and it's significantly making inroads into those supply side price and cost pressures which have been a big burden for Indian business.
How keenly are investors like you watching the Indian budget, and how important will that be for further FII flows?
I think from a structural perspective, foreign investors would like to see the government mapping out a medium-term fiscal strategy that really does attempt to address, in a measured and balanced way, the twin deficits, but in particular, obviously, the budget deficit, and how it's going to basically balance the need for more capital spending in the capital budget against the recurrent side, along with the natural developments and transitions which are occurring in the Indian economy. So, to put it crudely, what foreign investors are looking for is the same strong leadership mandate that was shown in the election campaign by the Modi government, and they're looking to see that coming through in relation to fiscal planning and fiscal management. There's one thing that most major economies lack at the present time, and that is a medium-term fiscal strategy. So if the government brings that if that comes to the fore in the upcoming budget, then that will be given a very big tick of approval by foreign investors.
Okay, then finally, just to wrap it up, Richard, is there a fear that the budget could end up being populist post the loss in the Delhi elections for the BJP?
There is that fear. I think it's a peripheral fear or concern. I think at the end of the day, there is an enormous amount, the national government has an enormous amount of political capital. It has a much stronger mandate than any of us, even those of us who are favourably disposed to the Modi government coming to power, even stronger than we expected it would be. So I think there is room to move. And I think we are in a world now where the other thing voters are telling us, from a populist perspective, if you like, is they want clear, decisive decision-making and leadership, and they want to see what politicians are going to do for the future development of their economies.
All right, Richard, thanks very much for joining in with that quick take, not just on India, but the global space as well.